Hello, traders. It's Monday, May 5th, 2014. It's 8 a.m. Chicago time. As always, thanks for joining me. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. First things first, we have a holiday in UK. European stocks, the DAX kind of pushed through some stops this morning and tripped a break lower. Lower open by stocks in Europe this morning was attributed to the ongoing unrest in Ukraine, with press reports over the weekend suggesting that 31 people were killed in a violent confrontation between pro-Russia and pro-Kiev protesters. Russian President Putin and German Chancellor Merkel have discussed the importance of effective international action to reduce tension. That's a key headline overnight. Other than that, it's really, really quiet, as you would expect, not only because it's Monday, but because it's post-NFP Monday. Very little on deck today. We have ISM services final at 8:45 Central, so 15 minutes after the open, and then we have ISM non-manufacturing at 9. So I don't know, this number at 8:45, I haven't seen that before. I don't know if it's that market stuff or not sure. Anyway, the traditional ISM non-manufacturing, which is the traditional ISM non-manufacturing was at 9. So PMI services final actually at 8:45. PMI services final. And then other than that, we just have ECB speaker Mersch, who's a hawk, at 11 o'clock Central. 25 billion 3-month bills at 10:30. 23 billion 6-month bills at 10:30 as well. That's what's on deck for today as far as economic releases. Looking at the week, the suggestion on the weekly calendar is quite a few European numbers for those who trade that session. We have trade balance tomorrow, IBD tip, economic optimism. Also, Fed Speaker Stein at some point. I don't have a time for that. Wednesday, China HSBC PMI services, German factory orders, and then Wednesday we have non-farm productivity, unit labor costs, consumer credit. So a very, very light calendar. Thursday, German industrial production. Also Thursday, we have the ECB rate decision. So that's a key number or key event. At 6:45 Central on Thursday, we find out about the ECB deposit rate and the rate decision. And then, of course, we have at 7:30 Central, we have ECB Draghi's press conference. We're going to be looking for that. That's going to be very, very important. Initial claims at 7:30 on Thursday, and then 9:30 we have EIA natural gas. Of course, Wednesday we have crude oil. And then Friday, pretty light calendar. A lot of UK numbers, construction output, industrial production, manufacturing production, visible trade balance, and then we have, for the U.S. on Friday, we have JOLTS job openings at 9, wholesale inventories, and wholesale trade sales. But that's about it. So it's a pretty light week this week. So the market's likely to move on its own power unless it's affected by the Ukraine situation. Okay, so let's look at what we've done, what are we trying to do, how good of a job, and what's likely to happen next. So if we look at the daily composite, we continue to fight this balance from way back in February. We're in this balance zone again, 64.50 being the key point of control in the area. We had a one-time framing down last week on a double top that was broken higher. Then we've had one-time framing up since. So we've had 1, 2, 3, 4 days of one-time framing up, pushing lows. In other words, higher lows, higher or equal lows every day. Today we are we're going to break that trend up with an open right up against 64.50 is expected. I had talked about last week the idea that we're likely to push to 81.50 and then fight that and then roll over and get back to 64.50 to find buyers if it has any power to continue higher. And that's what we're doing here. We're opening at 65.25, 64.50. 23 minutes left to the cash open, so it's got a lot of room to move. But essentially, we continue to be in balance. Here is what the profile looks like. This blue profile here is what things look like since the low. I still think there's a weak auction that has taken place down at 1840. It remains open. The market can actually easily get back down there. It's not that far. It's about 20 points since the last low at 44. So that remains to be seen. There seems to be an aggressive sell side action in the European markets this morning, pushing us lower, but we'll see when it opens. It's really the day is not set up in such a way that gives us a stronger probability of one thing happening over another. All we know right now is that in the big picture we're in balance. We also know that the one-time framing up has stopped since we're going to open below the last week's range, or in the middle of last week's range, since the week started right here with this bar. So I'm going to be templating this day, the 28th, which means that I'm going to be looking at day to see what kind of action we're going to get. So here's that day. If you recall, we had a pretty decent V bottom on that day, pushed down to 44, and then it closed actually near the high of the day, or in the upper range of the day. So I'm going to be looking at this profile and to see what areas it's likely to test. So we're likely to auction this 28th. Since we're below. So the initial reaction, in my opinion, if the auction is to proceed as we normally expect, the initial reaction is we expect responsive buying. Responsive meaning traders are responding to the fact that the market has moved away from value. Responsive means we're going back towards value. Value is above, so we expect responsive buying. So that's the initial push. So if we continue to lean against the low of the overnight session, then it's likely to take out the low of the overnight session early, close this point of control, probably chop around. Why would we chop around? Because of this key high volume node here. Probably chop around, find buyers, and start to get a responsive buy. That's my primary hypo for the day. If we open and we just chop and chop and chop and chop and chop, and we're not able to get through the 68 again, I expect at least a test up. If we're not able to get through and we start to break lower, break our opening swing lower later in the session after the number, then it's likely to start moving away from the most recent value, and initiative selling kicks in. So in that case, 55.25 becomes the target. 55.25 down here is an MCLVN, CLVN area. So essentially what we'll be doing is trading this day's auction again. We're essentially checking this day's auction. Let's mark this. This is LVN 428. Thought I marked that. Okay, so that's what I'm looking at. The other possibilities, we are opening in out of range against the point of control. That's the problem with this opening out of range here, is that we're right smack dab in the middle of the point of control here at 64.50. But we are opening out of range. I would love to see a strong buyer come in early and finish their business. Buy these prices and finish up so that we can get a little bit more volatility rather than the typical post-NFP or post-unemployment chip-chop kind of trade. Generally, Mondays after unemployment just don't do much at all, and then the Tuesday actually takes an upward skew. In the past, if you recall, every non-farm payroll over the last few months since the beginning of the year has seen selling on the ensuing day. We have not made it to the high of the year, 92.25. We got pretty close, 85, 75. There's still that target up above, and of course the 1900 century figure, and then I have some measured move targets above there. 1915 and 1937 as the targets above if we push forward. All I'm doing is taking this last swing and then the big swing from the February, early February low. Okay, that's it. Today's one of those days where you just wait and see what the market has to offer, and then see if you can find your spot. There's a higher chance that we would end up in an open auction out of range on the open and chop around this area again, because we are in a high volume node. Good chance that 63.50 will go or get tested, and then other than that, just it's not setting up to be a day where we just push our breakout trades. My targets are going to be very short range, so I'm looking for 2 to 3 points on average per contract, multiple times a day, and it's based on the mood of the day. If the day sets itself up to be a two-way auction, which means that the higher time frame is not active, meaning it's local to local, day trader type stuff, which means that the market's not likely to take a direction. The market takes a direction when a higher time frame steps in to do business over a large range. If they are absent based on how we open and how the numbers come out and what the reaction is, then I'll be trading from the outside in, meaning looking for the market to stretch and then fading that towards the middle, towards value. I don't anticipate a trend day today. We haven't had a trend day post non-farm payrolls in a while. Okay, so I'll leave you with that. As always, trade your plan. Risk comes first, and just don't hurt yourself. Just take your time. It's a long day. Don't shoot your bullets in the first 5 minutes when the market's finding its groove. You can wait that out. If you're not in alignment with the market early on, I strongly suggest you just wait. The market generates its own data as it trades. It's telling us what is going on, and there are opportunities all day long to win and to lose. So just take your time and let it set up. If you are not seeing a clear picture, just take your time, let it set up, find a place to lean on. In other words, find a bias based on what I'm doing here. What has it done? What is it trying to do? How good of a job is it doing? Who's winning the battle? And then trade from that side while leaning on something that's not so obvious. In other words, find a spot where the market's more likely to get your scale or your target than your stop, rather than getting emotionally involved, getting caught up in the action, in the market depth. Oh, look at that big offer and I want to sell, so let me sell in front of him. Well, that big offer on a day like today where locals are likely to dominate the trade, that offer is not going to stick around probably. So that's not a good enough plan. You need to just wait for the market to kind of set something up and take it according to your plan and your risk tolerance. Take care.